Hi everybody, this is Osprey from MyChartCoach.com, and in this video I want to take a look at the FANG stocks and then take a look at other stocks in the technology sector. Since the technology sector has been leading the markets, it needs to bounce and get a reversal going for the markets to reverse. So let's take a look and see what's going on with the stock market leaders. Okay, so first up we're going to look at Facebook, and so the first thing that I'm noticing on these technology charts are the level for fast stow. Okay, you can see RSI here is at 33, so it's getting close to that 30 oversold level. You know, usually when RSI gets down here, Facebook tends to get a bounce. Now look at fast stow down here. It's below 20. Below 20 on RSI is the oversold level. Okay, so every time it has dropped below 20 in the last year, it has made a nice bounce. And so as you can see down here, you know, the bounces are followed, you know, by each drop down to 20. And so the question is, you know, will history repeat? You know, will the drop down to 20 once again be followed by the white candles? And so what's going on is the right now there's the 300-day simple moving average support level at 162. That level it has been tested. You know, it was tested 2 days ago, and then it was tested again in after hours trading tonight, and so that is the key level to hold. That should be the reload level. It's the big level to hold. If there's a close below 162 and it turns into resistance, that would signal major downside risk. Okay, this is the bottom moving average on the chart. This is where you usually see a technical bounce. If the candles do bounce from this level, what you want to see are the candles working back into the bands, and then EMA 4 at 169.61 is the key level to break. It needs to close above that level to get the reversal going. Okay, so look at the big volume down here. So there's been huge volume behind this move. This is the largest volume for Facebook, and since going back to 2014, this is the largest weekly volume. And so you know, the question is, you know, there are people selling, but then are there other people that are loading? You know, the people have said that they are. You know, so one person's trash is another person's treasure. The question is, you know, where is the bottom? And so one level to keep an eye on is 162. If that level holds, there should be a technical bounce. If it drops below, that's going to signal more downside risk. Now, if you look at the 15-minute chart for Facebook, you can see here it's trying to get above the dotted purple line. That's the middle Bollinger Band. It needs to turn that level into support. You know, it was working on that and pretty much ever since the 1 o'clock here when it got above. And then it failed to close back above, and then in after hours trading, there was you know, pressure on the share price, and so it was hitting down here in this 162.50 level, and so that's putting the support from back here on the 20th on deck, and so that's going to be the big level to hold. You know, it's breaking it was trying to form a bottom here with the 21st. And now it looks like it's testing this level from the 20th. So if it drops down once again below 162, that's going to be a major red flag. There was a little volume spike on the close. The other technology stocks that I'll be showing you, they had larger volume spikes on the close. Now another chart to look at for Facebook is the 60-minute chart. And another clue that this is heating up and ready to go will be when the dotted purple line here turns into support. That's the middle Bollinger Band at 167. So when you see 167 hold, that's going to be your clue. Okay, yeah, this is really happening. It started over here yesterday when it got above, but then it quickly pulled back. It was a big head fake, and so now the key is going to be turning that level into support. Once that happens on the 1-hour chart, it should be the clear signal that the reversal has started. Notice that it did make a higher low today, but now the share price is down here around 162.50, and so that's putting it down here and testing the support from the 20th. This is the key level to bounce off. Once again, look at all the volume down here. So you know, big money tends to load at the bottom, and so we follow the volume bars. And so this huge volume spike down here at the very bottom, I mean, this is signaling that people loaded heavy. Okay, and so you know, we're looking for a technical bounce, but we'll see if the bears can drive it lower. If you look at Amazon here, okay, so it's hitting a key level as well. So check out how, okay, RSI and Fasto have held up a lot better. You know, they need to stay above 50 to remain bullish. Amazon is still in an uptrend on the daily chart. What it needs to hold is the dotted purple line here. That's the middle Bollinger Band at 1548. And so if it can hold that level, that will maintain the uptrend. If you look over here in February when it got shook out, it did drop all the way down to that 50-day simple moving average, and that is the downside risk here. Is that it comes down here and tests that level again. If it holds the middle Bollinger Band, that's going to be your clear clue that okay, yeah, it's the uptrend still happening, and you should get a bounce. If that 1545 level turns into resistance, then it could possibly drop all the way down and retest that lower Bollinger Band and the 50-day simple moving average. If you look at the Amazon 15-minute chart, you can see here it's trying to hold support from today, and yeah, it's you know, trading lower and after hours trading, and so yeah, so what it needs to do now, okay, so since it needs to come down here and hold this 150 level, so 150, the 1530 level, I'm sorry, is the big level to hold. And so tomorrow look for a technical bounce off that level if it's tested. That was the big support level on the 19th. It'll be major downside risk for Amazon if it drops below 1530. It needs to hold that level. Look at the big volume spike on the close. They were really driving it down, and so yeah, we'll be looking to see if it can get a technical bounce and try to keep that uptrend going on the daily chart. Now let's look at Apple. Okay, so notice Apple is at the oversold level on Fasto. Look at it, how it's at 168. You know, it did get below 20 here and stayed below on that big pullback. It's bounced on previous occasions below this 20 level. Basically below 20 is telling you that it's an extreme oversold level for a stock like Apple. It doesn't happen very often. Now you can see here there's 5 red candles in a row, and so you know the 5 red volume bars. You know that sets up the potential for a nice bounce play. Notice how today's real candle body is forming completely below the lower Bollinger Band. That signals an extreme move to the downside, and many times when that happens, you get a technical bounce. Now you know that didn't happen. You know the candles did work in here. There was a close below here, and it did drop lower. But many times when you get above or below the lower below the lower Bollinger Band or above the upper Bollinger Band, the candles will work back into the bands. And so if the candles do keep pushing lower, what you're looking at is down here at that 200-day simple moving average at 162 is the big support level below. You could see this gap fill right here and a possible bounce off this you know, 167 to 168 zone. That would be a key level to hold. It might fill that gap, bounce, and then run back up. It needs to get above an EMA 4 at 172 to get the reversal going, and that 150-day simple moving averages. If you look here at the 15-minute chart, they really drove Apple into the ground, into the close. Notice how it broke through intraday support, and it ended up making a new low close of the day on the close. And so yeah, that was a very bearish close. Notice there was a huge volume spike, and so you know, were there you know, people trying to catch the falling knife here, or were people just trying to get out at all costs? You know, was it just like, I got to get out. This is a total piece of garbage. It's freaking Apple. Everybody knows this is junk. We just got to dump it because it's heading to zero. I mean, really? I don't think that, you know, it just doesn't seem like that makes sense. It seems more to me like they drove it down and people were like, okay, it's Apple. It's hitting 169. This looks like a place to play the bounce following 5 red volume bars in a row and 5 red candles. So in my opinion, you know, I think there was probably, you know, people that were trying to catch the knife here and load on the pullback. So we'll see. We'll see what happens tomorrow. Many times, you know, people load at the bottom and then they sell at the top, you know, but who knows actually where the bottom is going to be. You know, we just have to keep following the charts. And so here, let's look here at Netflix. So Netflix has more of a similar chart to Amazon, where it was holding up much better. RSI is still at 53, so it's still bullish. You know, down here you've got Fasto hitting 25. You know, this is a level where it bounced off of when it pulled back in February, so it's hitting a key key support level. Then you do have to keep an eye on ADX here. If the green line crosses over the red line to the downside, that's going to be, a red flag. You don't want to see that. That happened briefly here, and then the green line got back above. If the red line got above the green line and the black line, that would be a clear signal that the bears were in control, and that would signal the start of a downtrend. So the question is right now, okay, do you think that the FANG stocks are going to start new downtrends on the daily chart? Is this mean that the run is over? And I don't know the answer to that. All I'm going to do is follow the charts. Because I'm not a big player. I'm just, just here, just trying to, follow the charts and follow the lead of the bigger players. And so we're following that through the volume bars and through their trades. And so basically, this is telling us that it could go either way here. With Netflix being right on the middle Bollinger Band, if that turns into resistance, it could drop all the way down to the 50-day simple moving average and get a downtrend going. And this could be the top of technology. That could happen. That's a very realistic thing that could happen here. Now, if support does hold, it has to get back above the middle Bollinger Band at 310. And so is technology done, or we're going to start a bearish downtrend for the markets? Because if the FANG stocks go into a downtrend, you would have to think that the entire market is going to be in a larger correction, since they were the leaders, unless some new leaders emerge and take the markets higher, which doesn't look like that's happened so far. And so the markets have been drifting, especially with technology being under such pressure. And so they need, the markets need technology to reverse to get the markets pushing higher. Okay, so let's look at the Netflix 15-minute chart. You can see here it's hitting this, it has that double bottom thing right here where it's hitting a bottom and then it's retesting that level. But it broke below in after hours trading, so it failed to hold support. Notice how it did close below the intraday low close of day, and so that was signaling more downside risk. It needs to hold that level, just like a close above signals that it wants to head higher. The inverse is that is a close below signals it wants to head lower, and that was a signal for the shorts to be piling on. They were piling it on into the close, and there was a big spike here. So I think you probably have a combination of people that had to exit. You probably had some margin calls, going into the close, and then you've got people that are trying to play the bounce. Okay, let's look at Google here. So Google is at extreme oversold levels. It's not very often. It happens every once in a while. You get Google below 20 on Fasto, but here it is. It's at 273. The one thing with Google and with Facebook is you can see here the RSI is at 36, so it's not down to that 30 oversold level. That was the same thing with Facebook up here. It's at 33, so it's not quite down to that 36 level, or 30 level. So that's the one thing, is that they could try to push it down to that level. And then if you see any of the FANG stocks break below 30 on RSI, I mean, in my opinion, that's a clear buy signal, just because it's very rare that they get below 30 on RSI, and these are the best companies in the world. All right, they're going to keep making lots of money. All right, the economy is still strong. They're going to be reporting really good earnings next quarter. Okay, so let's look here at the big close below 20. When that happened before, notice that the spike downs were followed by a bounce. So you had the bounce after. Now, and then you had over here, you had the below 20, and it did pull for a couple days lower, and then it bounced and ran. Bounced and ran after that getting to that extreme oversold level, sucked in the buyers again, and then they were ready to take it higher. And so here we go. We've got 5 red candles in a row for Google. That doesn't happen very often. We have 5 red volume bars, 5 red candles, and then you have a close today below the lower Bollinger Band. This is extreme bearishness, all right? And so to me, this is overdone to the downside. That we're not, it could have a technical bounce, and you could make good money playing the bounce, and it could keep the downtrend going. I mean, we're just short-term traders here. We're not making, I'm not making a long-term call. We're just looking for short-term trades, and so we're trying to time the bounce, and so when a candle gets below that lower Bollinger Band, that's a strong signal that it's oversold. hold. You know, it got below the lower Bollinger Band here, a white candle. It got below here and it pushed lower, and that's what it looks like is happening today, you know, with futures trading down tonight. And so we just don't know if it's going to, you know, take until Monday to get the bounce going, or if it's going to bounce tomorrow. Now, tonight, they did pass legislation to, you know, the government averted a shutdown at the last minute, and so they passed a spending bill. And so could that be a catalyst, you know, for the market setting higher? I was watching the futures market, and you know, there was a slight uptick. You know, the selling pressure eased a little bit, and they came off their lows, but then the bears piled it back on. People weren't, you know, it didn't get the futures market rocking right away. Okay, so let's look at Google here on the 15-minute chart. Notice how they drove it way down once again, got driven into the ground. Okay, when you get a break, you have an intraday low close. I always go by the high close and the low close, and so this is the key support level to hold today. And when it was holding here at 315, it had to hold, and when it broke at 330, that was your signal it was heading lower. And then you had the giant volume spike, and so people were really, you know, they were piling out of this. It closed below that you know, it's lower in after hours trading. Well, what has to happen is it has to get above EMA4. That's how all these bounce plays need to start on the 15-minute chart. And then the reversal is not going to really be starting in play really until it gets above the middle Bollinger Band. You can see it got above that level at 130 today, and then it pulled back. Once it's above the middle Bollinger Band, then it's heating up. And then when it can get above the 50 simple moving average, that's when it's officially starting that reversal. We like to, you know, when we like this setup here, when it gets above the 50 in the middle Bollinger Band, but then it has to stay above. It failed to get above the 100. But yeah, it has work to do, but we're keeping an eye for the bounce here. Let's look at Microsoft. So Microsoft has pulled back as well. It's down here at the 20 oversold. You know, each time it's gotten below that level, it bounces, you know. So down here it got below, and then there was a white candle below, white candle. And so here we are again. Check out, it's well below the lower Bollinger Band. All right, so this is extreme bearishness. Look at this candle here. This was the last time it was well below the lower Bollinger Band. It popped. Look how when it gets above the upper Bollinger Band, it pulls back in. All right, so it was above the upper Bollinger Band drop. You know, so this is a, you know, that's the Bollinger Bands are so nice to use because it can help you identify extreme moves to the upper or downside. And so right now it needs to hold this 90 zone. If it's, you know, it's trading lower in after hours today, the 100-day simple moving average at 88, that's the big key level. It needs to stay above that level. The chart would be super broken if it failed to hold off the 100. This is basically, we're getting the retest of the February lows with the after hours trading today. And so what we could see is a possible, like a long lower wick type situation where you see it testing that 100 zone and then a bounce again. You know, we could see a repeat of this type of pattern. I'm not saying it's definitely going to happen like that, but it could. Okay, let's look at the Microsoft 15-minute chart. And so once again, you know, you have the same setup. You know, we just looked at that. And so yeah, and so it has to. So Microsoft has to get above that middle Bollinger Band. You have the 91 level. Okay, so all these charts have the same pattern. You know, it broke below the low close, and that was your signal. It was heading lower, and then you had the giant volume spike at the end. And so, you know, you probably like you know, you have people that were jumping out and people trying to play the bounce. And then, you know, once it gets above that middle Bollinger Band, you know, at $90.72 here, that's when it can start getting that reversal going. And then when it's above 92, that's when it'll be officially back in play. Okay, let's look at Intel. So Intel has been holding up much better. You know, you have RSI at 56. Fasto's trying to hold 48. Notice how, you know, ADX is still strong even though it's ticking down. You still have the green line above the black and the red. And so you also still have candles above the middle Bollinger Band. So it's holding, as long as that middle Bollinger Band at 50 is holding, this uptrend's intact. If it drops below, you want to see this 50 level hold. That was the high close here before, you know, that signaled the breakout higher. A drop below 50 would be a red flag, and you could see it drop to 47. You know, is Intel ready to start a new downtrend, or is it going to bounce off of support here? It has to hold the middle Bollinger Band to keep the uptrend going. If you look at the 15-minute chart for Intel, you can see here it's hitting that key support level. You know, it got below the lower Bollinger Band. You know, it needs to hold the you know, so the open today. This was the open down here, and so it needs to hold that level, that that 50 level, and then basically down here at 50 is the key support level if it gets below 50.50, and so keep an eye on that. That was the low close over here on the 19th, and so that's going to be a huge support level down here at 50 if it works its way down to that level. Notice that it's had big volume spikes into the close each day here, so yeah, that's the all the trades getting wrapped up there at the end of the day. And so if you look here at TWTR here, this is Twitter, and so you can see it's below 20 as well on Fasto, so it's extreme oversold levels. You have Fasto at 0.53 here, and then you have it had a gap down today. It had that nice bounce yesterday, and then everybody that held got totally punished on the gap down, and then it pushed lower. It was trying to hold the close from 2 days ago, and it closed below that level. The big level to hold below is going to be this lower Bollinger Band and 50-day simple moving average. Basically needs to hold 30. It should be able to bounce off at 30. If it breaks below 30, the risk is this gap over here fills. There's a gap between low of day on this candle and high of day on this candle, and so the risk is if the 50-day simple moving average breaks, it could drop all the way down here to 27 and fill the gap. And so this is a crucial level for it to bounce off. If you look at the Twitter 15-minute chart here, okay, you can see how they it's just it had a kind of a sideways range today, and it held up pretty good until the close where it sold off with everybody else. It had that volume spike. Basically, it needs to hold this 30.80 level. Keep an eye on that. If you see it drop below 30.80, that's going to be your red flag. That was the low close from the 19th or the 20th, and so that should be a key support level, to signal downside risk. Right now it's trading below all the moving averages. It's in a downtrend on the 15-minute chart. It has to get above the middle Bollinger Band and then above the 50 simple moving average at 32 to get that reversal going. Okay, let's look at NVDA. Yeah, this one has been holding up. It has that, RSI and Fasto are both trying to, hold on to 50. You do have this minus DI here is pulling away, so that is a red flag. When you have minus DI above plus DI and ADX, that is a signal that the bears are currently in control. So it's tried to break out above that 250 level and it failed. It's below the middle Bollinger Band at 244. It needs to get back above that level. The big support level to hold below is the 50-day simple moving average at 237.77, that green line. It held on the previous pullbacks. It became support back here in January, and so it's been holding. And so that would be a bearish change in trend if the 50-day simple moving average finally failed to hold, and then that would signal that NVDA is really breaking down, and then you'd be looking at the 100-day simple moving average at 220. If the trend continues, then support's going to hold. Is NVDA getting ready to break down and start a new downtrend, or is it getting ready to break out and create a new high? And so that's going to be, it's coming to a flex point here. You have an ascending triangle pattern. All right, so you have the ascending support. So you have this triangle pattern, ascending support, and then you have horizontal resistance across here. And so one of those two levels is going to break. It's either going to, the candles are coming to a flex point here. They're either going to go through the 250 or they're going to drop below 240. Below 240, that's going to signal downside risk. Above 250 is going to signal upside potential. It's coming to a head here. That's the thing with all these technology charts that's so fascinating right now, is like we're on the verge of possible breakdown. I mean, that's it could get to be a nasty breakdown, and that is the possibility. If these charts do not hold up, it could snowball to the downside. And so yeah, this is a crucial level for a technical bounce. Okay, so now with the NVDA right here at this 241.50 level, it needs to hold that. I believe it busted below that in after hours trading, and so that 238.50 is going to be the crucial level over here. Notice how that was the support from the 19th. If it fails to hold, that's going to be a major red flag. There was a huge volume spike on the close, so yeah, big volume going into the close. If you look at MU here, it got punished today. They announced earnings, and I mean, it seemed like everybody thought the earnings were pretty good, but it traded lower, and so it was a really bad day for them to come out with that. I have not done the DD. I'm just looking at the charts, but there was a crossover there on plus DI. That's a red flag. and then today, you know, it had that gap down and the pullback. It has to get above 61 to head higher. Down below, there is a gap down here to 56. If it dropped down to 56, it could fill that gap and possibly get a technical bounce. You really want to see it hold EMA 13 at 57.64. That would be a red flag if it broke below. As long as the middle Bollinger Band at 54.87 is holding, this uptrend is intact. So it has a strong uptrend. So is it going to pull back and test that middle Bollinger Band now and possibly cool down, or is it going to bounce off of EMA 13 here and make a run back up to 61? Okay, so we'll have to see. If we look at the MU 15-minute chart here, you know, to play the reversals here, you know, I think it's best to make sure that the 15-minute chart is turned bullish. It has to get above that middle Bollinger Band and turn it into support. It tried to do that today and it failed. So it needs to get above 59.23, and then it has to get above these moving averages. Once it's up here at 60.30, that'll be the signal. Okay, yeah, it's ready to push higher. That would be above all the moving averages on the 15-minute chart. It has to hold the 300 simple moving average. Notice how it bounced off that level today. If it dropped below 58.76, the chart would be super broken and it would signal more downside risk. Okay, one more to leave you with is Snap. Yeah, Snap, you know, held up. It was closed flat on the day, and yeah, it had pulled back, and so yeah, you know, it's pretty interesting. It's already been in a downtrend. You know, the middle Bollinger Band turned into resistance here, the dotted purple line, and so it's been down here trying to bounce off of the 50-day simple moving average. It needs to hold 1644. Okay, so if it drops below that, then you have the 200 and 100-day simple moving averages down here in the 1530 support zone. That's where it would drop to if it fails to hold. And then if you look up here above, it has the middle Bollinger Band at 1732. That's the big level to break. Once it gets above that middle Bollinger Band, see how many times it was hit here and failed to break? That's when it can get a new uptrend going. So this is a huge level. Above 1644 signals upside potential. If it closes below 1644, that will signal downside risk. EMA 4 is at 1658. It's just hitting that level every day. Once they let it close above and turn that level into support, that'll be your signal that the reversal has started. Okay, and look at the 15-minute chart for Snap. You know, you've got the candles trying to turn the middle Bollinger Band and the 50 simple moving average into support. Basically, it has to stay above 1660, and if it can stay above 1660, then the high close here is the key level to break, and the 200 simple moving average at 1684. The closing price at 115. If it can get back above 1684, that's going to signal it wants to head higher. If it drops below 1650, that's downside risk, and we'll have the 100 simple moving average on deck at 1636. A drop below 1636, and the chart is broken. Okay, thank you very much for viewing this video. It's going to be an interesting day tomorrow. Come check out our chat, and we can discuss more of this and chart in real time. And yeah, and come check out all the action. All right, I'll post the link below the YouTube video. Thank you.